Well, hello everyone and welcome to Moementum channel. In this video, we're going to be taking a look at two undervalued dividend stocks, which are fast dividend growers. Let's take a look at these companies. The first company for us to take a look at is a company called M&T Bank. It is in financial sector, considered to be a regional bank, and the stock was last traded at the price of $157.37. In the last trading day, it was down by 1.3%. In terms of the dividend safety, M&T Bank has a dividend safety score of 99, making it a very safe dividend payer, with its dividend currently yielding at 3.05%. The stock, from a volatility perspective, have a score of 1.11 or a beta of 1.11. Beta is a measure of volatility, and a beta of 1 suggests that the stock has similar level of volatility as the overall stock market. In this case, looking at M&T Bank, it suggests that it has a slightly higher volatility than the overall stock market given its score. The company is having a market capitalization of $20.3 billion, making it a large cap company. M&T Bank operates as a bank holding company that provides commercial and retail banking services. And as of December of 31st, 2020, the company operated at 716 domestic banking offices in New York State, Maryland, New Jersey, Pennsylvania, Delaware, Connecticut, Virginia, West Virginia, and the District of Columbia. Also, a full-service commercial banking offices in Ontario, Canada, and an office in Georgetown, Cayman Islands. M&T Bank was founded in 1856 and is headquartered in Buffalo, New York. Moving on, looking at key metrics with regards to the stock and its dividend, the company actually does pay its dividend with a payout ratio of 28%, which is considerably to be low for banks, and giving it a lot of room for it to continue to grow its dividend amount. Its forward payout ratio is also at 39%, making it, again, a low forward payout ratio, leaving a lot of room for growing their dividends. The company has been paying its dividend uninterrupted for the past 32 years, and during the recession of 2007-2009, actually it maintained its dividend payment and didn't cut its dividend. What's more, their performance during the recession years, you could see here their amount of sales was down by 15.2%, which was better than actually the overall companies at the time, average growth during the 2007-2009. And if you look at it in terms of their stock return, the stock was down by 68%, which was worse than the overall S&P 500, given that S&P 500 actually was down by 55% between 2007-2009. In terms of dividend growth, as we mentioned, the focus of this video is on two dividend stocks with fast growing dividends. You'd see here for M&T Bank, in the last dividend increase they had was in November 2021, and they increased their dividend amount by 9.1%. What's more, over the past 5 years, on average, they have increased their dividend by 9% per year. And add to that over the past 20 years, a longer time horizon, in fact, they've increased their dividend by average of 10% per year, making it making actually one of the fast dividend growers that we are going to review as a result of that in this video. Let's take a look at their dividend history a little bit more in details. As we mentioned, the company has been paying its dividend uninterrupted for the past 32 years, over the past 4 years of which they have increased their dividend year after year. M&T Bank pays its dividend on a quarterly basis in the month of March, June, September, and December, and their annual payout currently is at $4.80 per share. Looking at valuation, M&T Bank's current dividend yield of 3.05% is 24% above its 5-year average of 2.46%, which indicates that now could be a reasonable time to invest unless you believe that the company's outlook has weakened. This could be suggested that given the fact that the stock price actually has dropped drastically, hence the dividend yield actually seems to be higher than what it is typically is, believing that the stock perhaps could be undervalued. But we're going to take a look at a number of other metrics and measures just so that we have a better grasp of it, and as well as looking at how analysts perceive this stock. Looking at the forward price to earnings ratio, as you notice here, M&T Bank's forward price to earnings ratio is at 12.9, which is about in line with its own 5-year average of 12.3. As a result, the market appears to be valuing the stock similarly to how it has in the past, suggesting that MTB could be fairly priced in that sense. If you look at that comparison to that of financials sector as a whole, very much bang on. It's actually exactly the same level of price to earnings ratio, forward price to earnings ratio compared to that of financial sector. Lastly, if you look at the 52-week price range for the stock, the highest stock price for M&T Bank was at $167.27, and the lowest was at $116.49 over the past 1 year. We're going to take a look at a number of additional key financial metrics, for example, earnings per share, the number of outstanding shares, their total sales, as well as return on equity. Let's start from the top left. As you notice, earnings per share, ideally would like to see a company that year after year, they increase their earnings per share as a sign of growth. In this case, the company was actually almost doing that for the most part. In 2018 and 19, they had a remarkable 2 years. They had, in fact, the highest earnings per share in 2019 at 14.1. In 2020, given the pandemic, actually they were hit and their earnings per share actually declined to the levels that they were seeing back in 2017. In the last 12 months, though, they have recovered quite a bit, and the earnings per share is shown to be at $15.50, the highest that it has had over the past 10 years. The next 12 months, in terms of projection, they are projected to have an earnings per share of $12.20. And if that holds true, as you see in the graph at the bottom, that would show a decline of 21% in earnings per share in the next 12 months. In terms of number of outstanding shares, ideally we would like to see the company over time buying back its shares. That gives actually more valuation and value to the shareholders. In this case, they were gradually actually increasing their amount of outstanding shares until 2016, but from there onwards, they actually reversed this trend. And as you see, in the last 12 months, they are showing to have an outstanding number of 129 million shares. We like to see that declining trend that you're seeing between 2016 to so far. In terms of total sales or overall revenue of the company, would like this number to grow over time. For the most part, you see that happening. As we mentioned, 2020 was an odd year for them, but in the last 12 months, they are showing to have $6 billion in total sales, which is the highest that they've had in the past 10 years. And lastly, in terms of return on equity, which measures how many dollars of profit the company earns for every dollar that shareholders have invested in the firm, you'd see that the company is showing to have 11% return on equity over the last 12 months, and it is above the 9%, which is our preferred amount for the banks. Looking at the stock return now, and this is just purely based on the stock price and not taking into account the dividend that you're earning. In the past 1 year, as you noticed, the stock has performed quite well, giving you a return of 32.42% growth in terms of the valuation of the stock price. In the past 5 years, the return over the past 5 years is showing to be at 9.51%. Not as impressive as the past 1 year, but again, the past 1 year has been oddly different year. Many quality stocks actually performed quite well as a result of that too. Now, we're going to take a look at analyst estimates. First set of analysts we're going to take a look at is from TipRanks, whereby we have 10 analysts covering the stock. 5 of them have a buy rating and 5 of them have a hold rating, giving the stock overall a rating of moderate buy. The price target in 1 year for the stock is at $176 on average. If that holds true, that gives us an upside of 11.84% in 1 year. The lowest price target was at $155, and the highest by analysts was at $201. We're going to take a look at analysts on Yahoo Finance. You'd notice at the bottom, the 1 year target established for the stock, according to these analysts, is at $173.92. And lastly, we're going to take a look at the analysts on Simply Wall Street, whereby they covers the fair valuation for the stock based on different metrics that they have and different calculations. According to these analysts, the stock has a fair valuation of $269.71, suggesting the stock is undervalued by about 41%. Before we continue and take a look at the second dividend stock with a fast dividend growth history, I have a big favor to ask you. I've put a lot of time and effort to put this video together for you, and I really appreciate if you can give this video a thumbs up and actually subscribe to our channel here on Momentum Finance and Stock Investing channel. We post every week several videos about investing, finances, as well as ways to reach financial freedom. Thank you. The second stock for us to review is a company called Atmos Energy. Atmos Energy is actually in the utilities sector and is a gas utilities company. It engages in the regulated natural gas distribution and pipeline and storage business in the US. It operates through two segments, distribution and pipeline and storage. And as of September 30th, 2021, it owned 5,699 miles of gas transmission lines. Atmos Energy was founded in 1906 and is headquartered in Dallas, Texas. The company actually pays a dividend, and their dividend yield is currently at 2.87%. And it does also have a very safe dividend safety score of 97. The last trading price for Atmos Energy at the time of making this video was at $94.90. And the company is actually a large cap company with $12.6 billion in market capitalization. Lastly, we're going to take a look at their beta. And you'd see here the score is at 0.35, which is a lot less than 1, suggesting that this company and its stock is actually considered to be very low volatility, which could be a good option for investors who are not really keen in terms of having a lot of volatility in their portfolio. Looking at dividend growth, as we promised, this is another fast-growing dividend company, particularly in the last round of increases for this dividend, as well as the last 5 years. You'd see for the latest dividend increase was in November 2021 with 8.8%. And in the last 5 years, on average per year, they have increased the dividend by 8%. Over the longer period of time, though, in the last 20 years, they've increased their dividend by average of 4% per year. The company does have a payout ratio of 48%, which is very low for utilities, again, suggesting that they have a lot of room for them to grow their dividends. Their forward payout ratio is at 50%. Again, it considered to be very low for utilities. And for us, that's actually a good sign, because whenever the forward payout ratio or normal payout ratio is actually lower, it does offer them a lot of opportunity in the next few years to continue to grow their dividend at a faster pace. In terms of their performance during the recession years, you'd notice that their sales was down by 37.6%. Their dividend actually during those years, though, continued to increase. They didn't actually decrease their dividend. In fact, they've paid dividend uninterrupted for the past 37 years. And lastly, if you look at their stock return, well, during the recession years of 2007, 2009, the stock was down by 20%, which was a better performance compared to that of S&P 500's negative 55%. We're going to take a look at their annual dividend per share, which is at $2.72. The company does pay its dividend quarterly in the months of March, June, September, and December. And lastly, as indicated, they have paid their dividend uninterrupted for the past 37 years. And in all of those years, year after year, they've increased their dividend amount. In terms of valuation, Atmos Energy's current dividend yield of 2.87% is 29% above its 5-year average of 2.23%, indicating that stock may be undervalued, unless you believe that the company's outlook has weakened. Similarly, their forward price to earnings ratio of 17.5 is below their 5-year average of 21.8. But if you look at it and compare it to the utilities, it is somewhat close to that of the forward price to earnings ratio for utility sector. Lastly, if you look at the 52-week price range, the lowest price for the stock was at $84.61, and the highest was at $104.59. And the stock seems to be hovering around halfway there in the mid mark of that 1-year price range. We're going to take a look at a couple of other metrics. Earnings per share, as indicated, we'd like to see a nice and steady growth, which seems to be the case actually. Very nicely, you'd see in the next 12 months, the company's expected earnings per share is at $5.42. Quite nice. It's the highest that it has been over the past 10 years. In terms of earnings per share growth, as you see the graph at the bottom of it, it's nice and steady. You see how they've performed. In terms of outstanding shares, we'd like to see this number declining. This is not the case. In fact, they're issuing new shares, and it's a little bit of that undesirable state for us. But nonetheless, utilities companies often rely on issuing equity to fund a portion of their gross expenditure. They are heavy capital investment kind of required type of firms, require heavy investments, and they have to rely on those debts to sustain their business. While overall it is not a good sign, when it comes to utilities, it is a unique type of business, and it's kind of understandable. In terms of their total sales, you see the last 12 months, they're showing at $3.41 billion in terms of their total revenue. I really would like to see companies that fairly and steadily and moderately, of course, increases their revenue. A little bit of that you see, but you notice back in 2012, 13, and 14, they were actually having much higher revenues. Nonetheless, in terms of earnings per share, they were not doing as well. So it seems that they have kind of outdone themselves in a sense that they've actually improved their earnings per share while gradually since 2015 growing, and especially since 2016 growing their revenue, as you notice. Lastly, return on equity is a measure that we talked about as well. We'd ideally like to see above 9% for utilities, and here in the last 12 months it's at 9%. In fact, majority of the past 10 years they've actually hit that threshold. The only year that they missed it was in 2012. We're going to take a look at the stock price return. And over the past 1 year, the stock was down by 2.02%. And in the past 5 years, though, it was up by 30% plus. This does not take into account your dividend income. We're going to take a look at now analyst estimates. There are 3 analysts on TipRanks covering Atmos Energy, with 2 of them having buy rating and 1 hold, giving it a moderate buy, with an average price target of $116.50, giving it a 22.76% upside. In terms of analysts on Yahoo Finance, there is a 1-year target price of $107.89. And lastly, if you look at valuation from Simply Wall Street here, there's a slightly different take on this stock. According to analysts on Simply Wall Street, this stock a current price is of $94.90, is a little bit overvalued by about 12%, the fair valuation being at $84.70. There you have it, folks. A quick look at 2 stocks that we talked about, which are actually showing to have fast dividend growth. And based on our analysis, they have signs of actually being undervalued. Now, for the last company, of course, there were signs that, according to Simply Wall Street, for instance, it might have been overvalued, but there are other metrics that shows that the company has done well, and why actually consistently is growing its dividend with a very, very safe dividend streak of over actually 37 years, which is just remarkable. Hope you found this video beneficial. We try to actually introduce through these deep analysis videos different type of companies. Some of them you may not have actually encountered as much or been exposed to much, which is why we want to bring them to your attention, and also provide a thorough analysis based on different metrics, give you a sense of how we go about analyzing these stocks, what type of metrics we look at, and what are some of those key criteria that matter to us when it comes to deciding on a dividend stock to invest in. Of course, these videos are educational, so be sure to do your own research before you actually go ahead and buy any stock for that matter. But we'd love to hear from you. What dividend stocks are you currently watching or buying right now in the stock market? We'd love to hear from you, so leave us a comment down below and let us know about that. Don't forget to subscribe to our channel. Here on Moementum Finance and Stock Investing channel, we post every week several videos about investing as well as ways to reach financial freedom. Thank you, and we hope to see you next time.